Hello, and welcome to In The DeNovo. I'm Will Grace, founder and managing director here at DeNovo Treasury, where we empower leaders of community financial institutions entering commercial and industrial banking with expertise for their strategic investment in treasury management products and services. We prioritize the how over the what. We believe in a collaborative journey and go beyond traditional services by actively transferring treasury management expertise to our clients. Thank you for joining us and staying in the know with In The DeNovo.
Hello, and welcome to episode 10 of In The DeNovo. I'm your host, Will Grace, founder and managing director of DeNovo Treasury. And today I'm joined by our guest, Peter Davey, venture partner and head of payments and identity at Alloy Labs. Peter is an accomplished executive, industry thought leader, influencer, and strategist across the disciplines of payments, banking, and financial services. In his current position as head of payments and identity, he is focused on building out platforms that help community banks and credit unions succeed in payments and banking. Those of us that have been in the industry will know Peter from his previous role at the Clearinghouse, where he was head of product and innovation and labs. He is credited as one of the original architects involved in designing and launching RTP from the Clearinghouse, the first real-time payment system in the US. Prior to that, he spent 10 years as head of payments and innovation industry at Capital One. He's a tireless advocate for the advancement of community banks and credit unions, leveraging new technologies to propel banking and payment services forward. Peter is well known and much sought after in our industry, so it's a great honor and a privilege to have Peter join our program today. Peter, welcome to In The DeNovo, and thank you for joining us.
Thanks so much, Will. I'm really excited to be here.
And you and I were catching up recently, and we were talking about embedded banking and financial institution strategy. And so thought it'd be a great topic. We've titled today Financial Institution Strategy and Embedded Banking. And so I thought, your new role is focused around embedded banking. And maybe you could start off by telling us a little bit about what embedded banking is.
Yeah, sure. So, I've pretty much spent the last almost 15 years of my career trying to drive a concept of more what I would call integrated capabilities that financial services can work with banking and you can kind of bring the industry together. Obviously, with the propelling forward of fintech, this has become a really hot topic around the world, not just within the US. Basically, how can fintechs get access to financial institutions to serve the mutual needs of their customer? And I think we've really kind of got into the precipice of this need for financial institutions and fintechs to be able to work together and partner more greatly. In the US, we're a little bit behind in the semblance of what the rest of the world is going through, right? We don't have open banking regulations, although there are some things coming out of the new CFPB proposals that might drive some of that forward. But certainly when it gets past even the data part, while we have formation of things like FDX and, Akoya that actually help to facilitate some of that data sharing among financial institutions, it really doesn't include the transactional side. And then you also take all the financial institutions who are working on their own API strategies, and then you have kind of a spaghetti diagram of API access across the industry. It doesn't really work very well. So when I think about the concept of embedded banking, I really think about trying to smooth that forward. How do you actually create more normalized access between financial institutions, fintech partners, and the customers that they're both serving to allow for a much more integrated handshake and to allow for more transactional things to happen in a seamless manner, as opposed to having to take something out of one system and put it into another and then have to accomplish that. Your users know that really well. I mean, that's one of the things that I think you are generally driving forward is can you actually create those better integrated experiences? So again, when I think about embedded banking, I think about it as the shared version of capabilities that actually help a bank's and a fintech's customer out. And whether that fintech is, a financial accounting package, or whether they're a brand new startup fintech that's focused in an industry vertical, the idea should be the same. If the customer is wanting to leverage those capabilities, we want the bank to actually have a role in that.
And you mentioned that the U.S. is somewhat behind in that. And is it is it because the integration has been so tough that keeps us behind, or is it because there hasn't been partners out there to kind of help bring that along? Is that what's put us behind?
I think it's a little bit of each. Some financial institutions are pretty savvy in the space. If you look at some of the top 10 financial institutions, they've been leveraging APIs for years, and it's easy for them to create leverage with the folks like Microsoft Dynamics or Intuit because, there's hundreds of thousands of customers on those platforms that they can share some of the credentials. But when it comes to the smaller financial institutions, and of which we have around 9,000 financial institutions in the US, depending on the day and depending on what
Sure.
stats you look at, it's a much more difficult process because a lot of these folks rely on third party service providers for their access to anything. So as you think about the middle market and the small business side, primarily of which are served by our community banks and credit unions across the US, most of them don't have those services because those banks haven't really thought about how to actually open up those integrations because it hasn't been necessarily a strategic priority for them in the past. I think now they're starting to see the need on that, and certainly with real-time payments and instant payments in the US, it's helped to propel that forward because those were really built as integrated systems. And now you're starting to see, what I have termed as the quiet quitting of customers, where they're moving to other capabilities. They're moving to other fintechs, and those fintechs are using the largest of the large financial institutions to do their payments origination. And the smaller financial institutions are really missing out on that opportunity to service their customer.
Okay, very good. Thank you for that. So we've also heard the term, a lot of us have heard the term embedded finance. Can you give us a difference between embedded banking and embedded finance, or if there is between the two?
It's a little bit of blurred service terms, right? So if we take my original, proposition about what embedded banking is, which it's the financial institution and the fintech or technology firm working together for the mutual opportunity of their customer, I look at embedded finance being a little bit more of the nuanced data piece of it.
Okay.
Not the transactional side, although I'm sure I'll probably have folks out there who will disagree with that thought process. But as I kind of split it within my own brain, I look at it as it's got some service capabilities, but usually when you're looking at embedded finance, you're looking at pulling the data from source systems. So, e.g., potentially using a Plaid or a Trustly to pull data into a finance application. But then usually the banking service side of it is done outside of the customer's normal financial institution. And that's kind of how I draw the dividing line between those two capabilities.
Okay, that makes a lot of sense. And then we've also heard the term banking as a service. And just I want to make sure because we've talked about banking as a service, and I talk about banking as a service with my clients a lot. And I want to make sure that we're delineating between all three of these things because I think they do cross at some points too.
Yeah, I think the banking as a service side, though, generally it's how do you actually give fintechs banking services, but those usually operate outside of the core attribute of what the bank is servicing for their normal customer set. So I kind of look at it as even slightly bigger derivation because ultimately you're just trying to drive the fintech to have banking services
Sure.
that they can then use with their customers. But again, while it may grow deposits of the financial institution, it's not an integrated thing, and usually those customers of those fintechs are not the financial institution's customers. And I think that's a big difference between embedded banking and then banking as a service.
Yeah, and the banking, the service side tends to have a lot. You have to build a lot of infrastructure as it relates to compliance and regulatory issues, and maybe not so much on the embedded banking side. Am I thinking about that correctly?
Yeah, because generally the embedded banking side, you have a customer that you've already gone through a KYC process on, and it's the bank's customer, and ultimately
Yeah,
you're just enabling the services to be extended out into the platform that the customer wants to use,
got it.
which usually they want to use their bank, but a lot of times it's not necessarily easy to do so.
Yeah, and I guess also on the banking as a service side, it's really been kind of a shortcut for financial institutions like community banks to build volume. And that's because it's not their customer, right? Because the fintechs are bringing them volumes very quickly. And
Yeah.
that's where sometimes they get in trouble because they don't have the compliance or infrastructure built properly. That's where we've seen some of the fines coming from
Yeah.
Some of the regulatory bodies.
Yeah, it's funny that we're going to take a little bit of a tangent here for a second, but
Hmm.
the know your customer's customer thing has been around for a
Yeah,
very, very
it
long
has, right?
time. And
Right. Yeah.
it's surprising that we all of a sudden think that we shouldn't have to do that because we're onboarding a fintech who has a bunch of customers.
Right.
So yeah, I mean, that's why people get in trouble with anti-money laundering and other things that are happening across some of those platforms. I mean, that
Sure.
said, I don't want to vilify the entire banking as a service industry. There's a lot of people doing it well.
Yeah.
It just happens that there's a few that have partnered with some unfortunate companies that have not been on the up and up.
Sure, but I think it's a good place to kind of delineate what's happening with embedded banking versus banking as a service and
Yeah, if we
where
had embedded banking, the question is, would you need banking as a service? Maybe, maybe not. I mean, I
maybe
think
not. Yeah.
honestly, for scale, you probably do. But if banks were able to service their customers more inherently and drive those better connections, deeper connections, I actually think it's at the mutual benefit of both the financial technology firm as well as the financial institution involved for their customer.
Yeah, and maybe embedded banking is a better way to go about it from a growth perspective and give them the opportunity to grow with the service. I think it's just embedded banking as a service. It could be done, if you do it too quickly. I think it's for a community bank. You could be signing up for some trouble. That's all. You have to be very careful,
Yeah.
in my opinion. So, common use cases for embedded banking. Can you share some of those with us?
Yeah, so I'll start with the one that I think we've all talked about in the past. It's like, hey, how do you get the guy who cuts your lawn to have an application that he can use that's actually completely embedded with his financial institution? So they can send a request for payment or invoice and then be able to get paid on it, right? So,
Yeah.
kind of that Intuit Lite, if you want, or the QuickBooks Lite application. There's a lot of financial technology firms out there doing things like that for industry verticals, and their challenge is how do they actually do the payments processing piece? In many cases, right now, without embedded banking, it's happening outside of that financial institution, usually through a PayPal or a Venmo or potentially a Square. And then at some point, the customer has to move their money from one of those platforms into the financial institution platform so they can do other things like pay bills or pay off a loan that they might have.
Mm.
And when that happens, you have this disparity of both information and data that the financial institution doesn't really know the customer's position, and then the fintech potentially doesn't know the financial institution's information that they have, right? So as you think about, like, one of the most common pieces would be, how do you fully integrate that against the bank stack so that you're actually having the bank process those transactions on behalf of that fintech for that customer, and at the same time, you're actually having those balances stay within the financial institution. And then also some of that data sharing so that both can see the growth metrics of that potential customer and how to help them out next. But I would say, like, the most classic way to look at it, that's probably the one that we talk about all the time because it's a big problem for the industry to solve for, is how do we actually service a lot of those SMB plus customers. On the middle market side, though, it's simply about how do you actually integrate against their accounting platform. So many times today, we teach our customers to have to do payments, which means that they're cutting a file out of their system in the back of Dynamics and they're sending it to their financial institution through an SFTP overnight to be able to have some of those things processed. Well, when you think about why we built RTP and why instant payments exist with FedNow in the US, it was really about upgrading the technology stack. And you can't achieve that if you keep everything batched up. You have to start to look at these things as more single-threaded transactions, whether they go through an ACH platform, which majority of them will still do because of the cost differential, or whether they go through an RTP or FedNow platform. So being able to now apply those technology capabilities directly in from a financial institution to allow for when somebody's in their accounting platform and they need to send a payment out, they can go directly into the customer's financial institution, and then it gets scrutinized there before it goes out the door. Reduces, in my opinion, a lot of fraud and risk across the transaction basis, but also smooths out the work that a corporate needs to do during the day. In many cases, they have to take breaks during their day when they get files in to do a whole bunch of processing. Whereas if you're looking at this from a single threaded solution perspective, where every transaction is its own transaction, not only do you have better accounting in the back end, but you also have a much better capability to smooth out the type of work that has to happen and have it happen when it needs to happen, as opposed to batch and deferral processes later on.
Right. And so you've rattled off a number of benefits for financial institutions um, that especially community financial institutions are missing out on today by not having an embedded banking type product. Um, Deposits, the disintermediation, right, that's happening by not having a solution like this.
Yeah, I mean, we've talked about it for years, the fact that, consumers have kind of split their deposits. So, they have their primary financial institution where generally they're going to have most of their deposits, but then they also carry these micro deposits, whether it be a Starbucks card, whether it be a Venmo or PayPal account, a Cash App account, etc. So they've got all these sort of micro deposits sitting around there. And we're seeing that in the SMB and middle market side too. They may have to have a balance with another financial institution because that's who's doing their payment processing. In many cases, they might only be seeing a debit out of their primary financial institution into somewhere else, so those funds can get further dispersed by someone else. Not only is there latency in that process, but it's also a mess and an accounting nightmare. So,
Sure.
trying to do that stuff more directly, I think, helps out the entire ecosystem, and then doesn't outsize the risk into some of these other companies. Because one could say, like, hey, you're outsizing some of the risk profile by putting some of these large deposits somewhere else where it's really not that company's depositor at the end of the day.
So I think we're getting to why a financial institution, especially when we're talking about community financial institutions, would include embedded banking in their strategy, or why they should.
Yeah.
And really that is to recapture deposits and things that are leaving or maybe have never even came to the financial institution that should be.
Yeah, I think outside of checks and a little bit of ACH, I mean, almost every financial institution is receiving at least ACH today, but there's still quite a few out there that aren't sending it, and especially ones that don't actually make it available to their customers to send. And it's hard, right? You had to teach your customers how to do ACH, how to make
Yeah.
sure that they had the right file, how to call in and do the dual control side of things. It's a much easier with instant payments because you're now thinking about these things as assured delivery and response, as opposed to something where you might not hear back for a few days if something happens. Again, not banging on the ACH network. It works extremely well for the things it does really well. But I think now, since we have the opportunity to more closely tie the transaction piece, that's where financial institutions, I think, have been kind of at a loss leader for a long time, especially on the community side. They've never really looked at payments as a strategic opportunity with their customer because they didn't really have to. Um, and with all of the occasions of payment that happen in so many different platforms outside of the financial institution, as we've moved toward more automation, it's much more important for them to be part of that picture. Because if they're not part of that picture, customers are generally going to find those services elsewhere. And then the question is, what value is that financial institution really holding for that customer anymore, especially on the SMB and middle market side? Their goal is to transact. Their goal is to operate their business. And if the financial institution is only there for a loan and not there for the transactional side, they can get a loan somewhere else.
Yeah, exactly. And as you and I know, community financial institutions, they heavily rely on on the core processors, especially in the beginning. And the core processors are very good about giving them a suite of payable solutions. And that's all about money leaving the bank, right? And they don't give them a lot of tools for receiving. And so, obviously the embedded banking pieces would really help them with how they're going to go about collecting and moving other, funds within the bank. And you talk about, helping with integrating into the back office of their clients and so on. I think that also would play into this as well. Would you agree?
Yeah, I mean, I can't underplay the importance of having the data available. If
Hmm.
you're looking at trying to help when I think about what banks do, right? They store and secure money, they lend money, and they help move money. right? The lend part of it is a difficult one, because if you think
Right.
about the majority of companies that need to go on growth trajectories, they don't know how to talk to their banker about what their needs are going to be. But if you can take the data now in a shared attribution mechanism where you're actually getting it from the financial technology firm, you're seeing the transaction data, and you can now start seeing the performance of that customer. There's so much that you can do. I mean, especially when you start to add on, things like artificial intelligence and data modeling on top of that. So I know that's a lot to think about. I mean, if I'm the CEO of a bank right now and I haven't thought about any of this, my mind's probably going to be boiling a little bit. But that's the reality of where we are. We're in a technology age. We have been for quite some time. And we need to be able to leverage all the different pieces of that technology to service customers. And, we've always said banks are banks, technology companies are technology companies, but that's really where the pairing of these two things have to come together.
Where do you think, and maybe we talk a little bit about where embedded banking starts to generate revenue for community financial institutions? That's going to be a big part of why they would get into, obviously, the deposit's a big piece, bringing that money back into the financial institution. But where do you see the products and services that they can create to be able to generate some fee income?
Yeah, I mean, I think the transaction part's the cheaper part on all this.
Yeah,
People have tried to go out there and sell transaction services, unless you're doing it on the hundreds of thousands, a day. It's really hard to sell transaction services because the economics aren't there. But, we all pay for subscription services that we see value in, right? If there's a connection fee that exists between the financial institution, that fintech, and that's what the customer is paying for on a regular basis, there's a recurring subscription revenue processing service that didn't exist before, right? Plus, then the data and the ability to potentially lend more money, have the deposits, as you mentioned. I think that's also key, keeping some of the deposits there, keeping the money longer within the financial institution, which then allows the financial institution to lend that money out to others. All of these things kind of have a cascading effect. But the reality is, they're not making any money on these things today. If the money is going somewhere else and they're losing out on all the transaction processing services, or they don't know what the growth rate of the business is, and then the business goes online and does an SMB loan application with a fintech, they've already lost that. They don't even know that they've lost it, but they have lost it. And I think that's the
sure.
challenge, right? Yeah, we call it, again, back to the whole quiet quittings thing. There's a number of applications where customers have quietly quit their financial institution without them ever knowing, because they still may hold the deposits. And if those are the metrics we're running our financial institutions by, it doesn't tell the whole story.
Yeah, and you talk about the power in the data, and you talked about the loan application. Think about the data analytics that now the community bank has at their disposal by getting all of this, and the things that they can do with the power of that now that they can provide to they do lending, but now they have even more capabilities to make better decisions about that lending too, with all the information they'll be gathering on their customers. So that's
Yeah,
another
absolutely.
uh, another opportunity. So what does it take for a community financial institution to get into embedded banking, being able to launch something like this?
Yeah, so I think the good news is technology has matured quite greatly over the past 10 years. It's gotten a lot cheaper to run, as things have moved to cloud-based platforms. You now have, I think, in many cases, a lot of folks that are working with core technology providers like the FISs and Fiservs. You have a lot of people outside of that group working with them to start driving access and creating API platforms. So I think the cost of ownership of these capabilities is a lot lower, but I think we have to start from the basics. One is a financial institution. You have to understand what it is you're trying to accomplish for your customer. We like to say at Alloy Labs, the jobs to be done, right? So what are the jobs to
Yeah,
be done? We don't think about that generally. We think about it as, oh, I need to do ACH, or I need to do instant payments, or that's part of my strategy. But the part of the strategy you should is, how can I be involved in the customer's invoicing process? Like, if I'm a huge middle market bank, why am I not part of their invoicing process? How do I let customers pay my customer? How do I let their customers pay them? So thinking about it in the modalities of not the payment capabilities, but in the types of features that really customers need, types of actions they need to take. And I think that starts to open up the aperture a little bit more to say, my payment strategy shouldn't be about ACH or implementation of same day ACH or implementation of FedNow or RTP. It should be about how do I accomplish this end goal for the customer and how are they doing it today and how can we be part of that? So I think it's starting with that strategy, which then leads to a payment strategy, which then leads to an entire corporate strategy about how you're servicing your customers. But it's thinking about it from your customer back and your customer's
Sure.
customer and how they're supposed to interact, because I think that's generally where the financial institution has to admit they want to play. And once they do that, it's not that hard to then find the technology providers that can come in and help you to build that.
Yeah, that's and are you finding that that's a conversation that community banks are ready to have, and that they're willing to have at this point?
Some of the more forward-thinking CEOs that I talk to on a regular basis are.
Yeah.
Um, I'd still say if I was to go to an ICBA or ABA bankers forum on payments, you get a lot of blank stares still. And
Okay.
I think it generally is just, there are people out there who get the fact that things need to change and that they need to be they need to be more integrated with their customers' lives. Some of them are more tech forward CEOs. Some of them
Sure.
don't have a tech background at all. But I think generally, if you're not having these conversations in your boardroom, um, you're way behind.
Yeah. So this is an evolving conversation in the industry, and one that hopefully community banks will start to have more and more, and otherwise they're going to be left behind, as you're saying. So what type of embedded banking solutions are available in the market for a community financial institution today, and maybe some of the providers and so on that maybe they should be looking at?
Yeah, so as you think about the tech stack and kind of work backward from it, I think the first piece that I look at is you need to have a way for your customers' applications to engage with you. So a lot of people look at that and sort of equate it to having an API gateway. So that API gateway can either be payments connected or not. I mean, you've got organizations like Finzly out there who have developed some API capabilities that are allowing people to do things. Nova Payments, you've got Neural. There's a lot of folks out there who are working toward trying to partner with financial institutions to create these gateways. The second, though, is figuring out what relationships you need to have with the customer. Some of that comes with looking at your own data today. So you can look at your data and say, how many times a month is Intuit debiting my customer's account to be able to do an action, or crediting my customer's account to do an action? Are they using Microsoft Dynamics? Like, what do the transaction codes look like on those? And, are those the ones I need to start targeting to work with? And then there are a number of folks out there who have started to do integrations against treasury management platforms. So sometimes it's about just connecting two or three of the providers together that actually create those opportunities. And certainly something that I've been working with my banks on is how can we actually create those things and help to drive them more at scale.
And yeah, you just kind of mentioned, that you're having those type of conversations. So how can others of us in the industry that are, kind of close to this, how can we help advance the conversation and kind of help move this along with maybe community banks that aren't quite there yet, but maybe have some of the attributes that maybe might be candidates for this? What are your suggestions there?
Yeah, so I think generally, a lot of financial institutions are still in the early stages of talking about their digital modernization. And, if they're talking about digital modernization in the aspect of, oh, I just need to have a better website, that's not going to cut it,
That's not
right?
going to do it. Yeah.
That's not going to do it. And I think there still are a number of folks out there having that conversation. So I think it's about upgrading that conversation to say, well, that time's passed you by. And while having a slick website might work for some of your customers, like what is your customer segment? Who is your target market? Who do you want to engage more closely? And taking a really good look at like, hey, if 90% of my deposits are middle market deposits, or 99% of my customers are middle markets and I'm on the loan side there, then it's like, how do I extend that relationship and engage them in a more deeper and meaningful conversation about how I can service them better? And it's not just about writing another loan, because if all the deposits start to leave the bank, you don't have any money to lend. So I think we have to start with the basics of what's the strategy look like in these financial institutions. Do you have a door that we can open to have a deeper conversation about what a digital transformation really means within your organization. Are you looking for more modern tech, more modern features? Do you already have an API strategy? Have you thought about opening it up to others? So I think it's really about engaging people where they are in their conversation already and trying to figure out, is there an opening there to be able to engage them in that much more meaningful conversation about what they should be doing.
So we need to leapfrog past the nice look and feel of a website and get into something much more meaningful.
Hey,
At this point,
if we're successful in this journey, nobody's gonna be looking at a website anymore.
it sounds like it. Sounds like it. That's good. That's good advice. Thank you for that. So what's the future hold for embedded banking? And, I think when I think about future, hell, in this industry, things change very rapidly. So let's talk next, 24 or 8 to 12 months. What do you think in the next 12 months for embedded banking?
Well, I think there definitely needs to be a little bit more emphasis in the industry on standardization. One of the things that the Faster Payments Council is doing is they have a API strategy work group,
Mhm.
and they're trying to promote the use of more similar types of APIs. I think that helps out tremendously in trying to drive growth. Because if I'm looking at it from being Microsoft Dynamics or Intuit or any number of platform providers out there, the Workdays of the world, I'm not going to embrace embedded banking until there's broader reach and standards of the types of technology I can integrate against. Because it is expensive to integrate against different technologies and have to maintain all of those connections. So you have to kind of put the emphasis on, as an industry, if we as an industry of financial institution professionals believe that we want to be able to move in this direction, we have to be able to embrace more open standards and be able to drive that forward. So I do think that one of the things that will be a big focus on over the next 8 to 12 months is looking at what are the opportunities to start standardizing, starting to pull some of these technologies together. I think there's multiple opportunities for multiple people to be successful in this space. So, for me, standardization doesn't mean it knocks you out of a marketplace. It means that you actually create more opportunity within that marketplace. Although some may disagree. I think that's the right way to
Sure.
look at it.
Are,
But I also think that, once you engage people in those conversations, because I saw it when the formation of financial data exchange, we started doing on the data side, it was about financial institutions, financial technology firms, and providers all being at the same table. And I think that's the type of atmosphere that we need to drive to do more standardization. And then that allows us to drive this industry forward in a much faster and more efficient manner. I already have seen some of the core providers start to look at some of these opportunities in that space. Problem is, it's really hard for them, being very complex organizations, to just look and center themselves on that future, knowing that they're making so much money right now on just the technology, the front end
right,
technology side for financial institutions today.
right. Yeah, that's a cash cow. They're going to ride that for a little bit, as long as they can, anyway. Is Alloy part of the U.S. Faster Payments Council? And are
Yeah.
they
So
part of the
yeah.
API
So
work group or anything? Yeah,
yep, I've been partnering with them on that, and I
good.
think it's good to see the growth of it. I mean, but I'd like to see it move a little faster, quite honestly.
Sure.
And I'd like to see some of the larger financial institutions embrace a little bit more standardization. That was one of the things that I tried to drive while I was at the clearinghouse. And I think there's a sense that some of these financial institutions feel like they already have a leg up, but it kind of freezes out the rest of the industry.
Right.
I've always had this opinion of no one financial institution is going to ever have all the customers. So therefore, we're going to have to work together to
Right.
drive
Yeah.
standards.
Right. Yeah, that's a good philosophy. Do you have any? This has been a great conversation. Do you have any closing thoughts you'd like to share, or anything you'd like to promote? Any speaking engagements coming up? This is going to be posted in July, so it's timely. If there's anything coming up for you.
Yeah, actually, I think having a conversation with my friend Peter Tapling at
Oh yeah,
NBC,
I know
I
Peter.
think in the July timeframe, that'll be fun. Obviously, we've got fall conference season that will be up closer than we ever want to admit. So we've got a couple of things going on then. But I think for me, the closing comments are, financial institutions just need to be more open about understanding what customers they have, how they can actually service them better and how they can actually help them to accomplish jobs to be done, and not focus in on the old paradigm. The old paradigm is not going to continue to work for them. And the ones that are a little bit ahead of the game are going to get there much quicker because they've already started down the journey. The ones that are still trying to figure out what strategy they need to employ for their organizations, I think it's about educating your board, making sure that your board is aware of the changing dynamics of the financial institution industry, and potentially upgrading some of the talent on that board as a byproduct of it, so you can make sure you've got folks that are there that actually have some firsthand knowledge on this. I think we've been a little bit lazy in upgrading some of the board talent over the past couple of decades, which has put some financial institutions behind.
Well, that's interesting. Good point there. Well, Peter, this has been extremely informative for DeNovo Treasury clients and prospects and In The DeNovo subscribers, and I really appreciate you joining today. And for all of us at DeNovo Treasury and our clients and prospects and In The DeNovo subscribers and viewers, thank you for tuning in. Peter, thank you again. Appreciate your time. Thanks so much.
Will. It's been a pleasure.
Yeah, and everybody have a great day. Thank you for joining.
Thanks for tuning into this episode of In The DeNovo. For more content like the video we shared today, check out our website at denovotreasury.com and our YouTube channel at DeNovo Treasury. Thanks, and see you next time.